Hi and welcome to my video. My name's Tim. I hope you're healthy and doing well. In today's video we're going to cover off renovating, and I'm going to focus on some of the things we should concentrate on getting right, and then other things we should avoid doing to ensure that we can get a profitable and a positive outcome. Now, the first question you want to ask yourself is, why am I going to renovate? Now, typically there's three main reasons, and we're talking about investment properties here. Number one would be to sell the property, bring it up to a higher value when we sell it. Second could be around increasing the likelihood of getting a higher rent or weekly rent. So we're looking to improve the quality of the property to then increase what the market will be willing to pay to rent the property. And then the other one is to build capital growth, or to increase the value of the property to then gain access to that equity gain to then reinvest or to do other things with. But the point is that whatever you need to be really clear on why you're doing it. Otherwise it's just too wishy-washy, and that's where people get into trouble. You need to have a clear understanding of where you're at, what you're looking to achieve, and then have a very, very solid, clear plan of attack as to how you're going to reach that outcome. Okay, so once you define and determine your strategy, or the reason as to why you're going to renovate, you need to then have a really good understanding of what's it's going to look like at the end. So if you're looking to sell the property, then you want to have a very clear understanding of, if you are going to renovate again, what's that potential sales price going to look like. If you're looking to hold the property, so you're going to renovate to increase the value of the property to then gain access to that equity gain, then what is that going to look like? And equally with improving the property to increase the rental return, again, what's the potential return that I will get at the end of the day from there? And so you need to look at those comparable properties, and you can go online to have a look at that. You can speak with real estate agents, selling agents, if you're looking to increase the value of the property based on the sale, or value to gain access to that increased capital growth. And property managers, if you're looking to increase the rental return, they'll give you a very good, clear understanding of what that can look like. Now, from there, you also want to make sure, so when we're talking about what that end value can look like, you want to also keep in mind and be aware of where the market is at, because you'll need to factor in the time it takes you to get from where you are now to the end of that renovation. And whatever that period looks like, you want to be pretty sure that the value of that property, or where the growth cycle is, that at the end of the day, when you do get to the end of the renovation, that property, or those values and those likely outcomes that you've basically worked your strategy to and your numbers around, is at least going to be that. So said another way, if you're looking to renovate and you think that maybe you're at the top of the market and it could start declining, or property prices could start retracting, then you want to be really careful around that. In a rising market, everyone looks fantastic. And, you've heard the stories of people that's, I sold my property for $100,000 more than it was worth. But then you ask the question, and what did you spend on it? Well, I spent $50,000. Well, if you didn't spend that $50,000, would you have still got that return or that growth? So you need to be realistic around what that looks like, and have an understanding of the market at that time, and then what it's going to look like at the end. From there, you can build your numbers around what that needs to look like as far as what it's going to cost you to get to that end point. So again, you want to make sure that if your property's valued at $500,000, say, and you're going to spend $50,000, it's not just going to be worth $550,000 at the end of the day. Otherwise, there's really no point of getting that done. Equally, if you're looking to increase the rental return, what's that going to look like? If you're going to spend $50,000 and increase the weekly rent by $10, well, again, you've got to ask yourself, is that worthwhile? So you really want to work the numbers around where it is at now, what it's going to look like potentially, and then how much it's going to cost you to get from here to there, and make an informed decision, commercial decision. It's all about the numbers. We're talking about rental properties here, not owner-occupied properties. If it's the house you live in, that's your rules. You can do whatever pleases you. However, if we're looking at an investment property, then it's purely about the numbers. So we need to make sure that we're not wasting money and time on doing things that aren't going to return a reasonable result for us financially. Another factor that we need to really consider is, what does the market want? The market will set the value of anything, not you. So you've got to take out what you think they want. It's not what you want or what you think they want. It's what they want. So you need to be really clear on that. There's no point spending money on areas of a property renovation that aren't going to have a return for you. So really define what the market wants and then make that happen for them. So once you know what the market wants, then when you're talking about looking at your budget and the funds you have available to allocate towards a renovation, what you want to do, make sure is that you're getting those things that the market wants done first. So if the real estate agent or the property manager says these are the areas that will gain the most improvement for you based on our understanding of what the market wants, get those done first and allocate more of your budget to those areas. Get them done first. If you've got money left over at the end of the day, then you can apply that to other areas. But you really want to make sure that when the market turns up to look at your property, they go, yes, this is what we want. And also too, then you can ask yourself, well, do we need to do a full renovation or can it be a partial renovation? So if you don't need to gut a kitchen completely, you can change doors and door handles, etc., then maybe that's a wise thing to do. So really be careful about where you're spending your money, because at the end of the day, typically your budget will blow out, or what you've calculated and planned around what it will cost you, typically that will increase. So you want to have a contingency, and therefore if you can save money in areas where you don't need to spend it, then that goes a long way to making sure that you're going to get a positive outcome and you're not going to overspend or run out of money at the end of the day. Now, this is a big one. How many people watch TV shows and get all excited about putting on, a tool belt and grabbing some tools from Bunnings, etc.? You really want to ask yourself, if you're considering doing the renovations yourself, or even part of the renovation yourself, you've got to ask yourself and be honest with yourself, do you have the experience? Do you have the knowledge? Do you have the time? Because if while you're renovating a property, you're not doing other things. So what does that look like for you realistically? And you want to have a very clear understanding of the process, what needs to happen in what order. I've seen it too many times where people do things, put a kitchen in before the power's been wired in, or electrical cables have been roughed in, etc. So what does it look like for you? And be realistic around, is it really worth your time and your money and your energy to actually do the renovations yourself, or are you better off handing it over to people with the experience and the knowledge and the understanding of what needs to happen in what order? So really consider that. Is it for you really? The novelty will wear off very quickly. The reality will hit home hard. So just have a really clear understanding of what that looks like realistically to you. Another area I think is really important to consider, and a lot of people don't, and they miss a trick on this one, and sometimes potentially you can get in a little bit of trouble based on what they've thought was going to happen that doesn't actually eventuate that way, and that is taxation matters. So I think it's important, and I recommend that you speak with your accountant before you start renovating and understand what it looks like. So, for example, you need to make sure that it is an investment property. So if it's your own home and you're moving out and then you're turning into a rental property, if it hasn't earned $1 yet for you, then it really isn't an investment property yet. So just be aware of what that looks like, and again, in conversation with the accountant before you start getting too far down the track of pulling things out and spending money on renovations, just to understand what that looks like. The other one around that is you really want to have a depreciation schedule prepared before you start renovating, and then after you renovate, after you finish renovating. So what we miss out on is depreciation, and how that affects our cash flow position is huge. So don't neglect that. The other thing is that people don't understand, and this is the big one, that even though you're taking out an asset, be it a kitchen, whatever it may be, out of the property, and you basically put it on the tip, that doesn't mean that it's rubbish. In fact, if you get the depreciation schedule done before you commence renovating, then some of those items that you discard actually still have a value, and you can actually claim that value of that asset, so the remaining value of that asset in the year that you actually perform, the financial year you actually perform the renovation. So that's called scrapping, and could be missing out on thousands of dollars in tax deductions if you just think that, well, I'm taking this out and again discarding it or putting on the tip, then it's really has no worth. Well, it actually does, or could potentially have worth. So just consider that as well. So importance of having a depreciation schedule prepared, if you haven't already, before you start renovating, and then again on completion of the renovations. Now, the other trap that people fall into around the numbers and thinking of how it's going to affect them from a tax point of view is that just because you go out and spend, again, $50,000, use that as an example, whatever the figure is, on the renovation, that doesn't mean that you can claim that as a tax deduction completely, 100% within that financial year. So there'll be some things that will be capital of nature, so they'll actually be depreciated down over time. They'll have an effective life. Some things will be tax deductible in that financial year of doing the renovation, but not very unlikely that the whole amount that you spend on renovating will be able to be claimed in that financial year. So just be careful around that as well. And again, conversation with your accountant will clear that up, and as well as, again, engaging a quantity surveyor to have a depreciation schedule done. I think it's really, really important. And again, investors miss out on thousands of dollars potentially on not understanding what that looks like. And if you get too far down the track, particularly after you've done the renovations, it's really hard then to actually put a value on those items that have been discarded as part of the renovation if you didn't have that depreciation schedule done first. So just be aware of that. Another one that's a really big thing around renovating, particularly for us as investors, it makes a big difference and helps with cash flow. Obviously, depreciation is a tax deductible expense, on paper loss if you like, but again, it can be worked back in to improve our cash flow position as well. Here's some other things that are really worth considering. I've done this on my own properties, and it's really helped with increasing the value of the property, and also too with the rental returns, and that is creating space. So I'm not talking about adding to the structure, like adding on a bedroom or adding on a bathroom, so structurally, but internally, if you've got a lot of living space, you can actually cut down on and convert some of that space into, say, a bedroom. And a really good example that I've done is with a property design where it's got a dining room included, a separate dining room. Now, today, I don't know about everybody, but certainly a lot of people, I think, and including ourselves, my family, that the amount of times we actually sat in the dining room to eat a meal was minimal. So, either eating in the family room or perhaps even while we're watching TV. So what I've done is actually converted that dining room into a bedroom or a study, and that's added value to the property, but also increased the rental returns as well, because effectively adding another bedroom or study. So that has a value to the market. So perhaps you can consider that. Also, another one that can really work well is converting a laundry into a bathroom, even if it's a toilet with a separate toilet with a vanity in there, and then basically converting a linen cupboard, if you like, into a laundry. So you can think about those things as well, because they do add value, and they're not that expensive to actually implement. So the return can be fantastic on the outlay, on the financial outlay around that. The other one, which is more on the negative side, I think, is around making sure that when you're doing your numbers, you factor in. So if you're looking to acquire a property and you think, okay, I'm going to buy this property for $500,000, just picking numbers again, $500,000, and I'm going to sell it for $600,000, whatever that looks like. And there's $100,000 there, less what it costs to renovate. Also, you need to really include, you do need to include what were the purchase costs. So typically purchase costs are around 5% of the purchase price. So on a $500,000 purchase, you're looking at $25,000 worth of purchase costs they have to be included or subtracted from the amount that you've gained. It's an expense, it's a cost. The other one is the holding costs. If it takes you whatever long it takes you and you've got a debt or a loan against the property, what were those loan costs? Their holding costs. You need to factor that in as well. And then on the outside or the exit, what are the selling costs? What's that going to look like? Because the purchase costs, the holding costs, and the selling costs have to be included. They're numbers. They're real and they're numbers. So on paper you can put down whatever you want, but in reality they are factors that we need to consider, or you really need to consider, because they can really put a dampener on your profit margin if you forget about those ones. Another trap that people can fall into is thinking that cheap is good. Sometimes you can get a bargain, sometimes you can get a great deal with a tradesperson, but really what you want to make sure is that, if you get 3 quotes to install a kitchen as an example, and one of them is, a third of the price, is that a good deal? Is that a bargain? Or is there a reason why that person is cheap? What you don't want to do is, what you want to avoid is having, going with a cheap price and then finding out it's not good, and then basically starting again, and that the cost of that is wasted effectively. So just make sure that you're getting some quality. Yeah, it's great to shop around, it's great to get quotes, but cheap is sometimes nasty as well. The other one is that what you really want to be careful of and be sure that you're getting qualified tradespeople where they're required. So if it's painting a house, no big deal. If it's putting in electrical items or gas appliances, for example, then you really want to make sure that that tradesperson is qualified, because the last thing you need to do, if you had a fire in the house and then it was determined and the insurance company found out that the person who installed that appliance wasn't qualified, that can really set up some alarm bells with the insurance company, and effectively that may even void your insurance. Okay, so if we bring it all together, then first of all we want to understand why we're renovating. What is the purpose of the renovation? What outcome are we trying to achieve? Once we determine that, once we know what that looks like, we want to also establish then what is the potential outcome. So if we're going to take the value of the property from here, what could it potentially look like? What's that increase available to us? Be it the value of the property, but also to, again, if we're looking to renovate to increase the rental return, what could that look like? Then we need to understand what the market wants. Again, take yourself out of the picture. It's not about us. The market will determine the value of anything and what they want. We don't tell them what they want, they'll tell us. So understand what that looks like. Then you can apportion your budget to those areas that are going to give you the best return. Some of the things we looked at as well to consider is, can you convert some living space? Again, the example I used was a dining room into a study or a bedroom. Can you convert a laundry into a bathroom? And then relocate that laundry to somewhere else, to a linen cupboard, for example. What can you do that will give you the greatest return for less outlay? We also want to make sure that we understand exactly what it's going to look like if we're going to do the work ourselves. Is it really worth it, or is it better just to basically keep doing what you're doing and pay people who are qualified and have the experience and the knowledge to do the renovation work for us? The other one was taxation. Get a depreciation schedule before you commence your renovations, and then once you've finalised the renovation, speak with your accountant, engage a quantity surveyor to prepare those depreciation schedules for you, understand what that looks like, and understand, is it a rental property? Has it earned an income yet? For you, not that it was rental income property before, even if you acquire a property with tenants in it, still that wasn't your rental property. So when is this going to happen? So also consider, and don't forget that when you're doing your numbers, that you factor in purchase costs, you factor in holding costs, and you factor in your selling costs. You also need to factor in with the holding costs, if you have to do those renovations whilst tenants aren't occupying the property, obviously you're not going to get a return there. So can you carry and or factor in those holding costs based on not receiving an income for that property? So they're the things that we really need to do. Set the plan out, understand where you are, what you're looking to achieve, how you're going to close that gap, what does that look like, what's the cost there, is it worth basically putting your money into a renovation, spending the time, doing all the research, all the planning, etc. Is there a big enough profit margin? Thank you for watching my video. I really appreciate it. And look, if you haven't subscribed to my channel already, it would be fantastic to have you on board. And again, I do hope that the content we covered today will allow you to get the best value out of your time, effort, and money when it comes to renovating. But as always, whatever you choose to do, I wish you all the best on your journey. Thanks so much.